Let's talk about Cathie Wood, the disruptor queen and front-runner of innovation in the financial world, who has a proven track record of making profitable bets on businesses that are revolutionizing their industries. The CEO of ARK Invest Wood has demonstrated a keen eye for identifying businesses that are not only breaking new ground, but also poised for exponential growth. Her bet on Tesla, the leader in electric vehicles and clean energy, is a testament to her forward-thinking and unapologetic approach to investing, despite the fact that her investment in Tesla has been making headlines and drawing attention in the financial world. Economic unpredictability. Cathie Underwood's leadership at ARK Invest has become renowned for its daring moves in cutting-edge investment thesis. With Tesla Wood, Cathie has found a company that embodies the spirit of innovation and change that she looks for in her investments. Cathie is doubling down and increasing her purchase of Tesla shares, and all of us Tesla bulls can learn from her courageous spirit in these trying times. So grab a seat, people, and join us as we examine Cathie Wood's Tesla investment in more detail and consider what it implies for the future of technology and finance. But before we do so, please hit the like and subscribe buttons. Without a doubt, 2022 was a terrible year for Tesla shares. CEO of ARK Investment Management Cathie Wood has remained a staunch supporter of Tesla by buying the company's shares on multiple occasions over the past few months. In October alone, Wood piled up on Tesla shares twice after the company announced that some of its deliveries had gone missing. After the market dropped in the wake of Tesla's Q3 report in mid-October, she purchased roughly 132,000 shares of the company and sold another 66,000 shares, 190, after the automaker's ups and downs on Wall Street in the second week of November. ARK Invest Wood's 3 ETFs saw an opportunity to buy Tesla shares. ARK's Innovation ETF bought 27,594 shares, while ARK's Next Generation Internet and Autonomous Tech and Robots CTS gained 2909 and 9173 shares, respectively, again in the middle of December. Across 3 of her exchange-traded funds, an investment management firm purchased 74,862 shares of the electric vehicle manufacturer for a total estimated acquisition value of $11.7 million. Following Zoom Communications and Exact Sciences, ARK acquired Tesla for 61,537 shares for the ARK and Innovation Fund ARK, 10066 shares for the ARK Autonomous Technology and Robotics ETF RQ, and 3259 shares for the ARK Next Generation Internet ETF. Despite Musk's recent acquisition of Twitter in a $44 billion take-private deal, Tesla remains ARK Suite's third-largest asset. Investors are increasingly concerned that Musk's focus may be shifting away from Tesla, which makes Wood's buying frenzy all the more surprising. Meanwhile, CEO Elon Musk was urging staff to look past the stock decline and toward the unexpected balance in Tesla shares. Cathie would put in an additional $2 million over the first few days of 2023. Based on daily transaction data, Cathie Wood's purchased 17960 shares of Tesla for over $2 million, an estimated worth at over $2 million. Wood's premiership for $15.7 million. The ARK Innovation ETF bought 145,000 Tesla shares, while the ARK Autonomous Technology and Robotics ETF bought an additional 31,000 shares for $3 million. Days into 2023, Cathie Wood bought $90 million worth of Tesla stock. A few days later, ARK Innovation's ETF ARK sold 4 million shares of NVIDIA. As of June 6, 2022, it was announced that NVIDIA's stock had dropped 42% from the previous year due to a recession in the semiconductor industry. On the same day, ARK funds purchased 58,044 shares of NVIDIA for a total of $6.6 million. Cathie would significantly accelerate Tesla's purchases. Wood continued her buying spree in ARK's flagship exchange-traded fund, despite the company's stock price dip caused by a box price decrease on January 13th, according to Benzinga, happening in just 1 week. Advantageous data over the course of the week. Tesla stock rose 8.26%, indicating that ARK Innovation ETF bought 168,980 shares of the company for a total of $20.68 million on Friday. This suggests that the firm bought Tesla stock every day save Monday, after video communication company Zoom, semiconductor company Intel, and even the cancer screening technology provider Exact Sciences Wood's flagship ARK Innovation ETF ranks Tesla third. However, over the past year, Wood's tech stocks have declined, so her investment performance hasn't exactly dazzled the investment community. The ARK Innovation ETF has decreased by 79% from its peak in February 2021 and by 61% over the last year. As of January 6, ARK Innovation's 5-year annualized return was minus 3.3%, while the S&P 500 had a positive return of 9.2%. Additionally, the fund's performance falls well short of the target for a return of at least 15% over 5 years. Even though ARK Innovation's dismal earnings may be starting to scare off investors, many have stuck with Wood despite her lackluster returns. ETF monitoring firm Verify reports a net outflow of $447 million from the $5.9 billion fund over the past month. But the fund has seen a net inflow of $1.17 billion over the past year. 2020 saw a 153% rise in innovation, mostly attributable to her incredible 2019. In addition, the technology sector has been among the worst performing in the stock market this year, which is in sharp contrast to its enormous gains in 2020 and 2021. The investment community now regards Wood as something of a rock star. Even the most well-known media figure is unable to adequately communicate these concepts to novice investors. Even though the value of ARK Investment Management's flagship ARK Innovation ETF fell by 57% over the course of the previous year, tech investor Cathie Wood managed to escape the carnage and the woods. In an email update to investors, ARK maintains its positive view of Tesla Wood's prediction that Tesla would reach 10 times. According to Wood, Tesla's decision to reduce the price of its electric vehicles increased the potential market by a factor of 10. In her book Dangerous, Wood claims that a number of innovations in the auto industry have put established manufacturers and the auto industry as a whole at a competitive disadvantage. She specifically mentions Tesla's autonomous taxi platform. In mid-December, Tesla, the world's largest automaker, is leading its industry in terms of innovation. The investment banking giant Goldman Sachs kept its buy rating and expressed bullishness about Tesla shares in the long run, saying that the company's prospects should grow even more. ARK, like Goldman, is confident about the company's long-term performance. He noted simplifying supply chains to position Tesla as the leader in cutting prices and costs to help the mass market transition to electric vehicles. Quoted by Yahoo Finance, Elon Musk is as focused as ever on the fact that Tesla and the EV secretary in general are entering a new phase, and the company is positioning itself to continue leading the way forward. Even though financial returns in the coming years may not match prior results with so many projects currently underway, you may want to consider whether or not now is a good time to buy Tesla. According to Cathie Wood's ARK Invest, Tesla shares would hit 500 by 2026. The projection, according to ARK's analyst Tasha Keeney, is a justice for the 3-for-1 stock split that went into effect in August 2022 and provides context for the $4,600 per share pre-split price target for 2026. This was disclosed by the corporation in mid-April 2022. Keeney stated that the business was incorporating ride-sharing services and autonomous cars into its valuation model. According to industry observers, these two components will make up around 60% of Tesla's value in the next 5 years. She added that the anticipated $500 per share is a massive 4-fold increase over the stock's current price. If you enjoy this video, then hit the like button. You can also subscribe to my channel to view more videos like this one. I'll see you in the next one.